Hello and welcome back to the ROI channel, the channel that's obsessed with the art and science of return on investment. Still coming at you from Panama City, Panama at the moment, guys, and thought it'd be a good opportunity to talk to something very interesting that's happening. Finally, I've been talking about an activist investor coming in to take over Nano Dimensions, a takeover bid, be it hostile or whatever. I don't care. I just want to get rid of the current management because they are beyond useless. I think that there's some bad actors in there. Okay, so let's talk about that today. Let's talk about why I continue to believe that there is an arbitrage opportunity in the company, in addition to further upside kickers down the road. So as always, nothing is financial advice, guys. It's just my opinion and what I think and what I'm doing with the funds that I'm in charge of, and basically my own personal funds. And so let's take a look. Quick backstory. There's other videos I've done on the channel about Nano Dimensions, about the opportunity. At the moment, as it stands, originally the idea was that this particular company was going to engage in a roll-up strategy or an M&A acquisition within the 3D printing industry and associated technologies. Therefore, the idea would be consolidating, streamlining SG&A expenses in particular, and then tapping into that market. And they successfully raised a lot of money in around that 2020 period. They had a huge market cap because the ideas was that investors like I believe ARK and Cathy Wood, which is a bit scary, but they helped to raise a lot of capital that they were then going to use to buy out these other businesses at sort of 5 to 7 times EBITDA and continue to execute that roll-up strategy. I've had a lot of success with this in the past. I love it when it's done well. What has happened? Well, the market has lost confidence in the CEO, Jove Stern, in particular, and the current management team, because they have all this money and they're not doing anything with it. And if you're looking through the cash flow statements and the balance sheet, it's slowly starting to erode. As it stands, the 2-minute summary is that this company has about 1.1 billion in cash on the balance sheet in various forms. The current market capitalization today, if we take a look, is 643 million. And so they have a negative enterprise value of 364 million. What does that mean? It means that if you buy the company for $643.51 million, you get access to that 1.1 billion. And so you're essentially being paid to buy dollars, but you're not really buying them because you've got more than what you're paying for. So it's a simple arbitrage opportunity. The problem is the management is standing in the way of that. So I believe that an activist investor will eventually succeed because shareholders like myself are sick of the current management. They have been absolute dogs in terms of their stewardship of capital, and they need the boot. Okay, so let's talk about what I thought was a very, very good article. Probably a little rosy, but a very good article on Seeking Alpha. If you're not a member of Seeking Alpha, I think you can get a couple of free articles. Anyway, I'll summarize it for you today. Activist investors are looking in at the moment through Murchison Limited. They have bought up about 5% of the shares, and they have made no secret they want to arbitrage this company. They want to kick the directors out, which is fantastic. The opportunity would lead to a 40 to 50% return, straight up arbitrage, old school Warren Buffett back in the day, John Paulson more recently. And so that's the opportunity that I see. It's extremely frustrating to see the current management. If anyone's watching has Carl Icahn's number and wants to sell him on this, I would love you. I'll buy you a beer, get Carl Icahn to come in. He would get rid of the management like that and set things back on track. Anyhow, here you can see the price decline in the company. You can go on TradingView and see that. These guys, I think they have a good thing. They're a technology company. They're not a bullshit tech company. They have a real opportunity here in the 3D and printed circuit board manufacturing. The opportunity here that I'm hoping for, and I've been very disappointed, is that Altium is an Australian company that back in the day are in a very similar industry. And what happens is you have this natural internet of things and you have a competitive advantage. So Altium, for instance, did really, really well in the ASX in the early days because once a company starts to use their circuit boards, everything is encoded for want of a better word, in that circuitry. And so it's extremely difficult, expensive, and time consuming and all the rest for a company to stop using Altium's circuitry and go into to use something else. And if these clowns could just tap into that and make use of that, then you would see a very, very good business opportunity. The only thing stopping this execution is the management. Anyway, as you can see here, here's what they did. They had a market cap of less than 100 mil, and they took that up to 3.5 billion when you had loose liquidity, and they did well. They raised a lot of capital. Now, nothing wrong with that as long as you're going to execute on that plan. That's the part that they haven't done. They haven't made anywhere near the amount of acquisitions. And so let's think about this. From 100 mil to 3.5 billion on the balance sheet, they made some acquisitions. Let's take a look at what their revenue guidance, what analysts are guiding their revenue, will go from 2020. So, okay, 2021, 10.5 million. You've got, a 3.5 billion market cap. There was a little bit of debt, but most of that was liquid cash. Let's call it $1 billion that they've still got. And you can only put that to work to produce what? 10.5 million on the top line. What? That's just ridiculous. What is going on with those funds? That's just ridiculous. Absolutely ridiculous. They could have bought fucking fish and chip shop and created more revenue than that. So this is where the concern lies. Okay, then they've potentially doubled revenues for 2022. We still haven't received, I guess, at the end of this first quarter, we'll see what did or did not occur in terms of their revenue production. Again, 30 million with 1.1 billion still in liquid capital. As it stands, the 3-month treasury bill, if you watched my previous video about why some of that short-term paper is not a bad idea while you're waiting for other opportunities, if they had just invested 1 billion of that capital at 4.5%, they're creating more, they would create more revenue than what they've done there. I mean, it's just not acceptable. And then from here, it looks good from a growth rate perspective because you've got a very high CAGR, and that's all well and good. That's great, particularly if they can acquire businesses with that sticky revenue, that sticky free cash flow over time. This is a tremendous opportunity. But they've got to do better than this. They've absolutely got to do better than coming up with $30 million of revenue with $1 billion in the bank. I mean, in the private sector, I was able to borrow money from banks and go and have a one-to-one return in the first year on the top line, and many occasions on the free cash flow. So what are these clowns doing? Okay, meaning if I borrowed $1 million, I could buy out businesses that would produce in the first year at least $1 million in revenue. I understand it's a different industry with different multiples, but these guys have all the capital. They could at least do better than 30 million. I don't know what's going on. As I said, they could put that into treasuries and get more of a return for no risk. Or if for whatever reason plans have changed, the right thing, the honorable thing to do is to then buy back shares or to give that money back to shareholders. It's just ridiculous what's going on. And so this is why Murchison Limited are coming in. They're trying to accumulate enough shares to get rid of this. I don't know if he's a clown or if he's just a really bad actor that's in charge of the board. I started off so nice and calm from my boat trip out yesterday on islands, and now this is just making me mad. So I apologize for that. But anyway, so the opportunity here, the question that I have, I own shares. Have I had enough of the management that I want to get rid of it? Or is it just the case that things have gotten so bad, we're probably at a floor? I mean, we're trading less than half of the book value of this company. And the book value here is not in property, plant, and equipment. It's actually in liquid cash. So again, this is the opportunity really to buy $1 for 50 cents. Do I add to my position, lower in my overall entry? And trust that either Murchison Limited or some other big capital firm or hedge fund can come in, accumulate control, get rid of the imbeciles in management, and then unlock that value for me over the long term. Will be compensate me for my frustration, so we say. So as you can see, there's a proxy battle going on. You can read the article. Murchison offered 995 million for Nano Dimensions. So that's basically a 30% premium to where the company is trading today. And you're paying 995 million. Company's trading at what we said about 650 million US dollars. I mean, there's just such an arbitrage there. I don't even have to be exact here. They will buy out the company, pay out all those shares, and then they'd have what? So you'd have basically 100 mil, a little over 100 mil after closing costs that the company would keep. And it's an open and shut arbitrage case. For me, at my current entry, I would receive a profit on that. So, I don't care. I'm happy to get the cash back. Or if Murchison think that they can put in a better management team, then the original thesis stands, and that's all well and good. Nano Dimensions didn't accept the offer. And so there's a lot going on here. So Stern and Murchison, through their representative, Mark Bistrisser, hopefully I pronounced that correctly, are obviously not the best of friends, but I really like what Mark is doing. He's trying to hold this clown accountable. When we come down here, this is the thing that worries me. So here, there was a special meeting held, and this guy's quietly trying to pass a few items that are really, really not kosher. They're really no good. So what he wanted to do, as if having 1.1 billion in liquid cash wasn't enough for this guy, he wants to float more shares onto the market. What he's planning to do with that, I have no idea, because he clearly hasn't done anything with the extra capital that was raised. He wants to increase the indemnity ceiling for companies' directors. No. And he wants to reduce the exercise price of what warrants that he has. So what that means is, when you have a warrant, if you're not familiar, there's a strike price. And it's common for management to be rewarded with warrants. And so what that means is, the idea, the management will increase performance of the company. Investors will see the company as more valuable, assign higher valuations, and it will lift the share price. Okay. And so the idea there is that once it hits this threshold, management can exercise their warrants. So they may get given either cheap shares or given shares, but that only kicks into effect. They can only sell those shares or exercise, get anything out of it, once they hit a certain threshold. It's a way of it's an incentive bonus structure, let's say. So what we have here is that this guy, the CEO Stern, his warrants have a strike or exercise price at 6.16. And one of the items in this meeting, he wants to reduce that basically by 2/3 to $2.36, meaning they would be in the money. Now, why does he want to do that? He just wants to offload his shares, clearly. So all three of these items were shot down by shareholders, as they should have been, because this is just, I don't even know. It takes a very special kind of arrogance or balls to try and put this across. Essentially, what they're doing is just trying to rob shareholders and insulting their intelligence. So really, really not good stuff. Got shut down. So that's great. And so here we are today, with this, again, this opportunity that's there, but they got to get rid of the management. It's just got to happen. So again, they countered, saying nasty things about Murchison. I don't believe it. I think clearly you've seen the actions of management, and I think that Murchison, being shareholders, are doing the right thing for other shareholders, trying to hold these guys accountable and trying to create a change. So that's where I stand on the issue. Now, if you take a look at executive compensation, these guys have a lot of warrants in the bank. However, they're also getting paid cash. So 2021, this clown got paid nearly $4.5 million in straight salary and share-based comp. To do what? Okay, they raised capital, but the idea of raising the capital is that they could go and buy these businesses, line them up together, and create revenue. And even if, like, this guy was saying, look, oh, these businesses are too expensive, so we're not going to overpay. Okay, that's fine. But he did say around 3 to 5 times EBITDA is what he was looking for, I believe. So, if you're paying 3 times EBITDA, if you're raising $1 billion in capital, you should be able to close these deals and have that, instead of being like 10 to 30 million in revenue, they should be doing 350 million in revenue easily. Okay, so you pay 5 times, so you pay 4 times. There's $250 million in revenue. It's just, yeah. they're orders of magnitude away from where they set the expectations of their revenue, and so free cash is obviously not there. So you're looking here 17.5 million in management comp when they churn through cash in that same year. Now, okay, now I understand that you may churn through some cash when you're making these acquisitions in the first few years, but that should be reflected in the revenue in the next year. And so far, that has not been the case. Great article again. So I want to give props to the writer. It really is. Essentially, what we're looking at now is merchants have crossed 5% in terms of threshold and the amount that they own. And so they can start to put forth more of these items up for voting. And I, for one, will be voting in favor of Murchison because they at least look to be creating, they want to create the value for shareholders. So what they want to do here, they want to remove the directors, fill the vacancies, and appoint their own guys or girls to run the company. And because these guys will be invested heavily in the company, it stands to reason that the people they appoint will be better than the previous or current management. Not that that is a particularly high obstacle to overcome. So at the moment, the current management have 13% ownership versus Murchison and the rest of the shareholders. But I really believe, considering what these guys have tried to do and shareholders were wise enough to reject it, I think that Murchison can certainly convince other shareholders to boot them out over time and then unlock this value. The race will be on between Murchison convincing the rest of the shareholders before these guys churn through this capital. But I mean, come on, $1.1 billion. As I mentioned, all they got to do is put into treasuries and get a return of 45 million, which would be more than what they've been able to do thus far. So yeah, it's going to be interesting. We'll see what happens. And the only other thing I wanted to point out is to look at the book value on a per share basis. So if we take into account the 100 mil that Murchison Limited want to execute this arbitrage, okay, they continue to buy in at around 246, right? Here, I think this passage sums it up nicely. So you've got 1.1 billion. That at the current share count is about $4.26 per share. Okay, so they've tried to buy the company for that sort of 995 mil. Maximum liquidation at 4.26 at the current share price of 254 represents a very decent margin of safety. So these clowns can continue to fuck it up, burn through a little bit of cash until Murchison or whoever comes in and convinces the rest of the shareholders to vote out the management, and then they can either liquidate the company and give that cash back to shareholders. Nice little spread. Very, very good. Or they could continue to actually do a turnaround play, execute on the original plan of management, which would be to actually go and buy some businesses that generate some revenue, synchronize it, and streamline costs over time using the synergies. And that would be a very good business model. Anyway, the stock has been bouncing around at sort of 50% of the book value. And so at around that kind of $2.13, $2.15 is almost essentially a floor. And so the question that I have is, what's the further downside versus the upside? And I think that you've got an easy, based on the arbitrage of the book value of the cash, 420 is a decent target. If you can get in, around 254, if it bounces down anywhere below that 215, it's just too cheap. And so I think you'll start to have capital inflows to bid up the price. So I do agree with a hell of a lot that was mentioned in this article. And so, yeah, I'm adding in the eToro portfolio, adding to the position purely based on this cash arbitrage. I have zero faith in management. I have a lot of faith in Murchison Limited and what they appear to be doing. And so I'll certainly be keeping an eye on voting items that come up, and I'll be voting in favor of Murchison. So there we go, guys. Not advice. It's just an update on a company that I have been following and that is in the portfolio. If you're interested in trading some options or what I'm doing personally is trading some options to increase my personal margin of safety and make some income at the same time, then the link to the Options Mavericks will be in the description as a free trial. So that's it, guys. Before I get too angry, I'm gonna cut it short. I hope you're all doing very, very well, and I look forward to catching up with you in another video shortly.